If you've got private health insurance, you've probably noticed something. Your premiums keep going up every single year. And it's not just a little bump. Health insurance prices have been rising faster than inflation for decades. We did the maths on how much prices have risen in the last 20 years, and the number will actually shock you. But why does this happen? What's driving these constant increases? Let's break it down. First, let's talk about how prices go up in Australia. Health insurance is highly regulated here, and that actually plays into the prices, which we'll get to in a minute. But one of the key federal regulations is that the government has to formally approve every health insurance price rise, and that price rise happens on April 1 every year. Now, sometimes the government pushes back on the health funds, sometimes it just rubber stamps the price rises as they come through. So now we know how it happens, but why are health insurance premiums going up by so much? Health insurance premiums in Australia have been rising steadily for years. In fact, over the last decade, the average annual increase has been around 4 to 6%. And since the year 2000, health insurance has increased in price 225%. Now, that number is huge, but it's even bigger when you consider that the inflation rate is only 90.7% in the same period of time. That means there's something special about health insurance that is making it more expensive than other things in society. So what's behind these increases, and why are they so much more than inflation? These are a few of the key factors. Firstly, the cost of healthcare is rising. This is probably the biggest one. The cost of providing healthcare in Australia is going up quickly. Hospitals, doctors, and medical technology is getting more expensive. For example, new treatments and medications often come with hefty price tags, and as these costs rise, health insurers have to pay more to cover their customers' claims. And yes, unfortunately, these costs get passed on to you in the form of higher premiums. This isn't unique to private healthcare. The public system has to face this as well, which is the reason that Medicare has to have more funding over time. At the moment, Australia maybe isn't funding Medicare as much as it ought to, but that's a topic for another video. Number two, we're using our insurance more, and this is mostly because Australia has an aging population, which is causing us to make more claims on our health insurance policy. As that population ages, more people need medical care, chronic care especially, and with private health insurance, that means more claims are being made for hospital stays, surgeries, and other treatments later in life. More claims means higher costs for insurers, and again, these costs can get passed on to you. Thirdly is just inflation. I mean, it's not just medical costs that are rising, the general cost of running a business goes up as well, and health insurers have to pay their staff, maintain their systems, and cover all the other expenses that come with running a company. So wages and inflation do rise, and so do the costs of doing business. Fourthly, government regulations. Now, the Australian government plays a big role in the health insurance industry, and this is generally a very good thing, but there are some downsides too. For example, insurers are required to cover certain treatments and services for everyone, even if they are expensive, and that includes pre-existing conditions, which are covered in Australia after a 12-month waiting period, unlike countries like the US, where pre-existing conditions aren't covered at all. This is a better way to be. Aussie health funds, though, also have to meet really strict standards for customer service and financial stability. Now, these regulations are designed to protect consumers, and I would not do without them, but they can add to the cost of providing health insurance, and that can lead to higher premiums. So what can you do about it? Well, you can't stop premiums from rising, just as you can't stop the sun from shining. There are a few things that you can do to keep your costs down, though. Firstly, shop around. Health insurance isn't a one-size-fits-all product, and different insurers offer different policies at different prices, and by comparing those options, you might be able to find a better deal. For example, a not-for-profit fund might have better value cover than your current policy, thanks to it returning all of its profits to members. Or it might not. You just have to check it out for yourself. A comparison site like Finder is really useful to compare policies and hopefully find a better deal. Number two is just review your cover. If you're paying for things you don't need, you're going to be paying more. For example, if you're young and healthy, you might not need a gold level policy. Ditto, if you're done having all your kids, you probably don't need cover for childbirth anymore. Switching to a lower tier could save you hundreds or thousands of dollars a year. Thirdly, take advantage of discounts where they exist. Now, many insurers offer discounts for things like direct debit or membership benefits and points and stuff like that. But a lot of them, most importantly, offer sign-up bonuses to new customers. Now, these can be really generous, like offering 6 or 8 weeks of free coverage and waiving a bunch of extras waiting periods. You're also eligible for these if you switch from a different fund. So switching every year could be a very worthwhile investment. All right, here's the bottom line. Health insurance premiums are going to keep rising, and that's just the reality of the system that we live in. But By understanding why it happens and taking steps to manage your costs, you can make sure that you're not paying more than you need to. If you're ready to compare health insurance policies and find yourself a better deal, you can use finder.com.au to compare quotes from over 40 health funds in minutes. To learn more, click the link in the description. See you next time.